And hello, everybody. Welcome to ETF Edge. It's your go-to place for everything exchange-traded funds. I'm your host, Bob Pisani. We'll be talking about ESG and a little bit of pushback on the ESG front these days. I want to talk about thematic ETFs as well. Joining me, three of the best in the business. Todd Rosenbluth is the head of ETF and mutual fund research at CFRA. Jay Jacobs is senior vice president over at Global X. We'll be joined very shortly by Mona Naqvi, head of ESG index strategy at S&P Dow Jones Indexes. Todd, I want to start with you. This is a bit of a historic day for the Dow Jones Industrial Average. Obviously, a number of big names going in like Salesforce, a number of big names like ExxonMobil coming out. I want to just ask you generically, what kind of impact does a day like this have, a big change in an index, have on ETFs in general? And why are so few, why is so little money indexed to the Dow Jones Industrial Average in general?
Well, I think that's a key point here, Bob, is that the Dow Jones Industrial Average, there's one major ETF, that ticker is DIA, that's the SPDR ETF, about $25 billion in assets. That is very small compared to the three largest ETFs, SPY, IVV, and VOO, which are all tied to the S&P 500. Combined is about $700 billion of assets. And then if you think about the smart beta ETFs of growth versus value, dividends, low volatility, the S&P 500 is really the king of the index-based products as opposed to the Dow Jones Industrial Average. But this does matter. So DIA, the weightings and the exposure changes. Obviously, the stocks change, 3 coming in, 3 coming out. But the healthcare exposure, I think, is what's most notable to us at CFRA. The weighting went from about 14% to 18%. Because Amgen is taking Pfizer's spot, and this price-weighted index, Amgen has a higher stock price. You know, CRM is taking a bit of the hole that Apple, the stock split had. And so it's a reminder that ETFs are not static. You need to stick with them. But this is not as big as if it was tied to the S&P 500.
Yeah, I think the short answer is the S&P 500 historically, by the investment community, has always been viewed as a broader representation of the overall market and has always captured the professional interest, while the Dow Jones Industrial Average has been of more interest to the average retail investor.